This is NBC2 News live at 5.
Welcome back to NBC2 News Live at 5. Andy Stadler braved the winter elements and is here for another Tuesday tax tip segment. Thanks so much for coming out today to talk to us.
Well, thank you. It's a day off and everyone's thinking about taxes and the storm.
Exactly. If you're not thinking about the storm, you're thinking about getting your taxes done. So we're going to talk about some more benefits that parents can take, which is another benefit of children, right?
That's right. Having a child in your home during tax time is a great thing, but you need to have a qualifying child, and typically a qualifying child is going to be a child that's related to you either by blood or through marriage.
Okay.
And then we have an age test. We look at see if they're under the age of 18 or if they're in college under the age of 24.
Okay.
Then we look at a support test to see if you support them more than someone else. As long as you got that, then you're going to have some pretty good tax deductions for that.
Well, let's talk about some of the credits that people can take if they have all the qualifying things.
One of the first things is a child tax credit. Now, this is for a child in your home with you that's under the age 16 and younger.
Okay.
Simply because you're claiming them on your tax return, you automatically get what's called a child tax credit, and that's $1,000 per each child in addition to their exemption. So you want to be sure to get that. That can add up to be a nice, and that's $1,000 in your pocket.
That's great. And then you have the child and dependent care credit.
That's right. This is the daycare credit.
Okay.
As long as a child is under the age of 13 and they're going to a daycare or a babysitter type facility, you can write that off. As long as both parents are working, or if you're a single parent, as long as you're working or going to college, you can get a nice tax credit for that. You will need the name of the daycare provider as well as their ID number or their Social Security number to write that off.
Okay, and then a couple of others we want to go through. The earned income tax credit, which we've talked about before, but tell me how this relates to the children.
This, as long as you have a qualifying child living at home with you, you can get up to nearly $6,000 of earned income credit, and this is for an individual or a family that has wages of $49,000 or less.
Okay.
It's a really nice tax credit. That's what's called a refundable credit, so you definitely want to look to see if you qualify for that.
And also another thing, an adoption credit.
Yes. Adoption credit's been around a long time, but the new part this year is it's called a refundable credit. You can get up to $13,000 refunded back to you as long as you've paid that much out in adoption fees, or if it's a special needs child, you get that automatically.
Now, what about kids that work, so children with earnings?
Yes. If you have a child that worked at a fast food or something like that, typically they don't need to file a tax return unless they had federal tax withheld. But if their earnings are more than $4,000, or if they made more than $1,200 in interest and dividends, then they do need to file a tax return.
Okay. Let's go on to some college-related ones. Higher education credits, and then there's an Indiana college saving plan.
Yes. The college tax credits for the federal tax return, you can get up to $2,500 refunded back to you. Just keep track of your tuition, keep track of your books, the lab fees. In Indiana, we have a special, it's called an Indiana College Savings Plan. As long as you put money back into this college savings plan, the state of Indiana will give you up to $1,000 back to you on your tax return for doing that.
Great. And then also a student loan.
The student loan interest.
Yes.
For the amount, when you start paying the student loans, the interest is 100% deductible up to $2,500. You can write it directly off in the front of your tax return. It's not part of itemizing. You get this all the time. Okay.
Something else I want to talk about, which we've mentioned before, the making work pay tax credit.
Yes. This is $400 per individual or $800 for a family. It's called a Schedule M as in Mary. You simply fill it out and you would get this refunded back to you. It's a refundable tax credit. You get it refunded back to you on your tax return.
Okay. Now, something else we've talked about before, which is always worthwhile to go over again, filing status, because that can affect your return as well.
That's true. December 31st, that's the day that sets the entire year. You're going to look at, am I married that day or single that day, if you got a divorce or if you got married that day. That sets the entire day. So whatever your status is on that day, that's what you got to file your tax return. So either married filing joint, married filing separate, head of household if you have a child, or single or qualifying willer.
Okay. Another thing always worth going over again because of the changes with the rapid refunds.
Yes. So many people are getting their W-2s January 31st, the day they got to be out, and lots of folks are either coming in the office or calling about, getting a rapid refund. There's a massive changes, big time changes with that. Most places in town do not have a rapid refund program. Call around, check around. We at Stadler's, we've got one. but you definitely want to call around town to see who has and who does not.
All right, Andy, some great advice. Thank you so much. And if you have any more questions for Andy, you can call his Terre Haute office. The number is 478-2800, or the toll-free number is 800-447-2015. For more on its services, just go to mywabashvalley.com and click on our Valley Expert page. Thanks so much for being here with us, and get home safely tonight.
Thank you.
And